price of gold has been languishing, and frankly, it's been weak as piss. But this could be all about to change, with everything pointing to a screaming buy in gold and everything gold related. I'm Biko Konstantinos, and that's what we're going to talk about today. Gold is so shiny. And if you want more shiny things in your life, click on that like button. And if you want to be protected from the upcoming economic storm, consider subscribing to my channel. Let's help each other stay on top of the big turning events. And in my opinion, gold will be one of them. Let's check out the gold price. After COVID, we saw a spike above 2,000, but then we started to see some sideways trading before another spike above 2,000 here in March 2022. But after gold wasn't able to remain above 2,000, it started dropping sharply. So the price initially found some support here around about that 1680, rallied off it, but then dropped below that support level. So the gold price fell to the low 1600s on 3 separate weeks recently, but each time has rallied off that level. So potentially we're seeing a bear trap where the price fell below the previous support levels of 1680 or so, stayed there for a little bit, but could rally back above that support level. Now we call it a bear trap because investors might see this breakdown of support and feel like the gold price is going to collapse. So the bears might have opened some short positions here, and if price rallies strongly above this previous support, those gold bears get traps and the bulls start gaining momentum. So why has the overall gold price been so weak lately? Historically, gold is supposed to do great during periods of high inflation and geopolitical uncertainty. And what have we seen? Exactly that. So gold bulls invested because they saw these signs ahead, started to lick their lips because everything was happening as they thought, but then tears for gold bugs. So why have we seen gold fall when we've got the perfect environment for soaring gold prices? There's 2 massive factors in my opinion. First, aggressive interest rate hikes from the Fed have pushed the US dollar to a 2-decade high. And when the US dollar rises, it makes gold much more expensive for foreign investors because transactions are normally in US dollars. And the second huge factor is that the yields you can get on bonds have risen significantly, so investors can get higher yields on safe products like bonds, which can make gold, which doesn't pay any income, seem less attractive to investors. So these factors, among some others, have put downward pressure on the gold price. But could that all be about to change? Don't believe me that the US dollar's had a major impact? Check out just how strong the dollar's been. Back in early 2021, the dollar was trading around 90 cents, but a year and a half later, it's trading now well above 100, hitting a high of around 115. It's starting to get quite choppy and volatile, and this could lead to a breakdown in support, meaning the end of the uptrend for the US dollar. Now check out the correlation between the US dollar and gold. During 2022, as the US dollar rose against nearly every other currency, the gold price fell in very similar proportions. To me, that looks extremely obvious that the strong US dollar put downward pressure on gold. But check this out. While the dollar is showing signs that it might have topped and could be starting to fall, gold is showing signs that it might have bottomed and could be about to start a new uptrend. So we've got high inflation and major geopolitical risks, but what's something that could really propel the gold price higher? It starts with stag and it ends inflation. According to this Time article, we're headed for a stagflationary crisis unlike anything we've ever seen. Stagflation refers to a period where you have high inflation along with stagnant or falling economic growth. Now just check out what happened to gold in the 70s. At the start of the decade, the price of gold was around $30, $40, quickly rose to over $100 and then nearly $200, then fell back a bit before going parabolic. So the percentage capital gains just on gold during the 70s were out of this world. So why did gold go so crazy during that period? Well, in periods of economic and currency instability, people seek out a tangible source of wealth, something that holds real value and offers a form of protection against financial collapse. So gold went parabolic, and it could do so again. One of the most exciting things for the gold price is when you step back a bit and look at the long-term chart. Over a decade ago, gold price hit 1900 here, had a 10-year curve trading pattern, which ended in the price breaking 2000, only to see a shorter retracement and another break above 2000, followed by a sharp reversal lower. So we've got a significant resistance zone around 19 to 2000 US dollars. But the great thing about resistance levels, they're meant to be broken. And once this one breaks, all I can say is giddy up. That long-term resistance level will become a strong support level, which could propel the price upwards for many, many years. But when a train's about to leave the station, you don't want to be running to try and catch it when it leaves. If you can get on board or invest early into one of the next big things, you could end up seeing gains that are out of this world. And isn't that why we're here? So how can you profit if the gold price really does start to soar in the years ahead? One way would to be invest into physical gold. That means investing in gold coins or gold bars. And the second method would be investing into gold mining companies that either explore for gold or have developed a mine and are producing gold. So by buying a gold miner, their profits or share price will generally appreciate dramatically as the gold price soars. You can do very well buying individual gold stocks, but you have to do your research, and there's many risks involved in a company, because even if the gold price goes up, your particular gold miner could always go down. If you wanted a slightly safer option, you could buy an ETF, which allows you to invest over a number of gold mining stocks. The biggest gold mining ETF in the world is called the Van Eck Gold Miners ETF, with the stock code GDX. While it's been super hard seeing the gold price languish in an environment which should be very supportive for gold, patience for gold investors could be extremely well rewarded. The US dollar's mega rally seems to be coming to an end, and as a result, some of that downward pressure that's been keeping a lid on gold might be about to get lifted off, and the world just might be about to turn shiny. I'm Biko Konstantinos.